What is a cashless society? What does it actually mean in a literal or a high-level sense? A cashless society is one where cash is not generally accepted as a means of payment. Transactions in a cashless society are conducted with electronic payment methods such as cards or mobile payments, rather than physical money. Going fully cashless as a society would mean that physical cash would no longer be accepted as legal tender. In a cashless society, people wouldn't need to carry notes or change, and the provision of cash infrastructure, such as ATMs, would disappear. Right now in the UK, the use of cash is at an all-time low. Cash transactions made up only 28% of all UK payments in 2018, compared to 60% of payments in 2008. Current predictions suggest that by 2028, we can expect as few as 9% of all UK transactions to be made with cash. Debit cards are now firmly established as the UK's preferred payment method, having overtaken cash in 2017. The status of cash is not just declining in the UK, but in other countries around the world, albeit at different rates. In the US, credit cards are now the most popular method of payment, followed by debit cards and then cash. That said, the US still supports strong cash usage. The pace at which Americans are shifting away from using cash is slower than in many other developed economies. Around 70% of US consumers still use cash to make purchases in a typical week. This compares with Sweden, where only 60% can remember using cash at all in the last month. In China, cash is fast becoming superseded by mobile payments. It's the biggest mobile payments market in the world, with 2/3 of online sales and more than 1/3 of all store payments made through mobile wallet operators such as Alipay and WeChat Pay. One particular region that's leading the global cashless revolution is Scandinavia, with Sweden expected to become the world's first cashless society by 2023. This has been driven by a number of factors, including Sweden's strong digital payments infrastructure and favourable government regulation. In Sweden, cash represents barely 1% of the economy, and most banks don't accept or provide cash in their branches. Electronic payments account for 4 out of every 5 transactions. Cards are the most popular method of payment, but the use of mobile payment apps is massively on the rise. The most popular example is Swish, a free, instant, peer-to-peer payments tool set up by Sweden's biggest banks in collaboration with the central bank. The concept of a cashless society is divisive, with arguments for and against. One of the main benefits for both consumers and businesses is convenience. Electronic payments make it quicker and easier to pay in most everyday situations. Contactless has made it possible to just tap and go, reducing queue times and delivering a frictionless experience. Mobile payments mean you don't even have to carry a wallet with you at all, just your phone. They're also perceived as being the most secure way to pay, as you can verify yourself using a fingerprint or facial recognition technology. Another benefit is cost. Accepting electronic payments is increasingly cheaper for businesses than accepting cash, as it removes costs associated with cash handling and deposits, for example. Businesses that choose to go cashless also benefit from a reduced risk of robbery, as they no longer have to hold cash on the premises. Certain types of crime would also be reduced in a cashless society, tax evasion, for example, as all transactions are traceable and accounted for. However, it's fair to say that there are some who could lose out in a cashless society. It's estimated that around 17% of British adults, over 8 million people, could struggle if the UK became cashless. Poverty is the biggest indicator of cash dependence, with the poorest in society unlikely to have the means of accessing computers or smartphones to enable them to bank digitally. Other key segments of society with a high dependence on cash include rural communities, the elderly, the unbanked, people with certain disabilities, as well as those with a history of debt problems. In terms of what's next, mobile payments in particular are expected to soar in popularity as smartphone ownership continues to increase across the world. That said, we're also likely to see some resistance to the rapid pace of change. In New York, for example, the city's council recently banned cashless businesses in a bid to prevent discrimination against low-income residents. Ultimately, cash is vital in supporting financial inclusion, and governments and financial institutions must provide adequate support to ensure disadvantaged groups don't get left behind. Educating people about the benefits of digital banking and payments is also key to helping them become comfortable with using less cash in their everyday lives.